Hi, this is Kerry Artek with Wicked Stocks bringing you the daily Tesla report for Tuesday, November 1st, 2022. Just want to remind you, we're also doing the daily Apple report. That's stock on a day-to-day basis through November. Be sure to check that out. Also, be sure to click like and subscribe each and every time you watch content that you actually do like on our Wicked Stocks YouTube channel. It helps us out a great deal in being found on YouTube. Subscribe if you haven't already to the Wicked Stocks YouTube channel. You'll be apprised of new content each and every time it's uploaded, which is at least once a day, now twice a day. And please share the videos with your friends and colleagues. Let's jump into the chart. I'm going to show you this, remind you of this, that about, 3-4 trading days ago, we settled above this formation at 220.52. We certainly slipped below it in a pretty aggressive way last Friday, but it held on Monday. And as I've been saying, it is a level 3 stars that can contain weekly selling pressures, and above which we have a very recent 2 to 3 week buy signal that we're expecting to play out into what is now the mid 260s. Former channel bottom, former high, new descending 1/3 speed line based on the low from about a week and a half or so ago. And this area remains a 2 to 3 week objective above 220.52. Now we have minor levels all spread throughout this entire area, all carefully chosen, all well suited for aggressive day traders. The most notable of which is 233.54, and that 233.54 is nothing more than a simple trend line off this October-September low area. It can contain intraday selling pressures. If we push or open above 233.54, 242.92 is likely today. 242.92, where are you? Here we are. Upside 3/8 Fibonacci, AB. A was the August high. That is the highest this market has been, Tesla has been, over the last 3, 4, 5 months. And B is the pullback move low, actually, from October. So 3/8 up, 242.92. If we happen to push or open today above 233.54, and keep in mind, it is expected as an eventuality, I don't know about today, but holding above 220.52, this market remains bullish over the 2 to 3 week time horizon. And so pushing above 233.54 should not come as a great surprise today. And if so, this 242.92 with recent volatility, it shouldn't be a big surprise as well, on an intraday basis. So pushing or opening above 233.54, 242.92 in reach, and I think that would be about it for the day. That would be a pretty incredible rally from where we are, in the order of $15 or more. Overall, we'd still have this rising weekly channel top that is at a pretty steep pace at 248.37. I don't expect to see that here today, of course, but I will say this, I kind of finesse these levels in terms of their strength. So for instance, we push above 233.54 today. Let's say that we test 242.92. Then tomorrow, I'm going to be probably beefing up this trend line, 233.54, to session containment as support, able to contain daily selling pressures. Because of the 2 to 3 week bullish dynamic, I'll keep it light to the upside. But once we clear this, it becomes more solid as a support level to buy into through the balance of the week. And so closing above 233.54, quite honestly, I think this channel top that is presently at 248.37 would become kind of a 2 to 3 day objective. I have it as 2 stars now. By that point in time, able to contain buying through the rest of the week, and we could fall off from there to some extent. Closing above 248.37, not going to happen today. But if over the next few days we settle above that channel top, we're probably just another 3 to 5 days at most away from reaching our 2 to 3 week objective at 264.36. And that area is also properly labeled here. This zone, if tested over the next few weeks, and we're anticipating over that time horizon, able to contain buying through the rest of the year. And we can fall off from here back to this low area again in the 204s, 206s roughly. Within 2 to 3, 3 to 5 weeks, and perhaps holding below 266.92 once tested, we could fall all the way back into this channel support zone. That is significant long-term support. So let's cover the downside. We're not far from 220.52. If we break 220.52 today, let me show here. If we break or open today below 220.52, we could within the day test 212.04, which is a downside 5/8 Fibonacci over the last week's low against the high from a few days ago. 212.04, I have it reduced now to an intraday support level. The truth is it could contain the balance of the day's selling pressures if we happen to break 220.52. But if we close below 220.52, that failed 2 to 3 week buy signal should have the similar consequences to the downside over the same time horizon. So, we are now in a 2 to 3 week buy signal mode above 220.52, anticipating the mid 260s over the next 2 to 3 weeks. And yet, if we close today below 220.52, that failure to follow through on such a classic buy signal as exists above 220.52 should, over the next 2 to 3 weeks, yield this long-term support region in the 174.48 to 182.89 area. So closing below 220.52 for those of you who trade the 2 to 3 week outlook, for those of you who trade options over the 2 to 3 week time horizon, for instance, you could consider buying 175 puts that don't expire for at least several weeks. And I'll let you be the judge as to which you actually acquire. If you go a little further out, if you go a couple of months out, you're sort of eliminating that theta, the time decay element, and you'll have decent delta on the way down. That put will open up nicely. If you go 3 weeks only, you obviously know that you could be entirely correct on the directional move, but not show much in return as you approach expiration. I think I'm just going to leave it at that for Tuesday's Daily Tesla Report. We'll be back tomorrow with Wednesdays, and you have a great day.